Well, it never hurts to be a little lucky, and I've been lucky being in Miami with Bloomberg Intelligence. The key thing is short squeeze, I think, Paul, is the best way to describe it. I remember clearly in 2011, there was nuances in the futures curve that said, yeah, this is kind of weird, a bit spiky. Same thing now, you're seeing short squeeze on the Bloomberg terminal, point out, with silver getting $52 an ounce. The key thing you remember about silver is you pointed out it's outperforming gold this year, but on a risk-adjusted basis, it's way lagging gold. Silver basically trades about 2 times the volatility of gold, and on a 5-year basis, they're both up a little over 100%. Silver should be up 200% in the environment. So what you're seeing in all the precious metals, platinum, palladium, silver, is all catching up to gold. The significance is they're much more industrial, and gold is becoming less industrial and much more of a store of value every day. And as your previous segment mentioned, you got to watch the VIX. If S&P stock market volatility continues to recover a little bit, 90-day volatility just last week reached the lowest in 5 years towards the VIX. VIX is around 19%. Then that should be part of, I think, what gold's looking ahead. But that would be a pressure factor for all the other metals, particularly anything but gold, and silver's in the but gold's category.
Mike, what will you look at to help determine just how much more leeway silver has to continue rallying? Paul mentioned a short squeeze, and certainly we've seen in London there's an issue where people are now trying to ship silver to the U.S. to take advantage of the price differential there. If you are looking to ride this rally, how much more legs does it have?
That's the key question, Scarlett. And the key rule is old resistance becomes support. Now, silver's bumped up to 50 3 times. The Hunt brothers way back when, 2011, and now we're above 50. Is that 50 level transition in support? Probably is, but these kind of things you have to be careful being the first buyer, and that's why I think you have to be watching. I'm very concerned about stock market volatility recovering from these levels, because that'll be a pressure factor on silver and potentially a demand factor for gold. But 50 is the key level. It's just so stretched here. Short covering rallies in silver. And remember, silver's nickname is the devil's metal for a reason. If it's sucking people in at these levels, you got to be very careful, particularly for those of us who've been bullish precious metals for too long, and this year we're finally just catching up.
I'm looking at reading your research here, Mike, and you talk about a ratio of the prices of gold to silver. It's now about 80. If you divide, the price of gold, 4,100 divided by 50 for silver, it's a multiple of about 80. Is 80 a lot? Is it on average? Is it cheap? Or how do we think about that?
I'm glad we went there. Thanks for reminding me. The gold-silver ratio below 80 right now, it's around 79, is a good support level. It's been between 80 and 105 for about a year. Last year's low was in the fourth quarter, was just below 80. And the key thing for it to stay below 80, it means signs of global economic pickup, demand for that industrial metal silver. And I'm more